This week was all about the Federal Reserve, and right now they seem to be split almost right down the middle. The New York Fed president, he said he wants a rate cut in December. He said the bigger risk to the economy isn't inflation anymore, it's the weakening labor market, which is what I've been saying seemingly forever in every market update lately. But based on that, the odds of a December rate cut did jump up from about a third to almost 75%, at least for now. And on the other side, we got the Boston Fed president. He's still focused on inflation, and he does not want to see a cut in December. Although she did finally acknowledge that the job market's softening, but she's basically only looking at initial unemployment claims and completely ignoring continuing claims, which shows how many people can't find new work, and that number is very high. The Chicago Fed president, he came out saying he's not so sure about cutting anytime soon. He also sees some weakness in the job market, but he is also still worried about inflation. So right now, there's 12 voting members. 4 want to see cuts. I should say 4 want to see a cut, 3 want to pause, and 5 are undecided. But those undecided are leaning toward a pause. And now the one bright spot this week did come from the September jobs report, which finally came out. Unemployment came in at 4.4%, which is higher than expected, and that usually helps mortgage rates because it shows the economy's cooling off. But the catch is that report is old, and we're not going to get the November jobs numbers before the December Fed meeting, so the Fed is going to be making decisions without information that would likely encourage a cut. And a couple other things that are worth mentioning, Nvidia did report earnings, and yeah, that actually kind of does matter for interest rates because tech stocks and even Bitcoin tend to move together. And when big tech companies wobble, money tends to flow into safer assets like bonds, and that could help rates. But builder sentiment improved for the second month in a row, but it's still in the contraction zone. Things are looking up, though. Next week will be a busy one. We're going to get reports on inflation at the wholesale level. That's PPI, plus retail sales, pending home sales, Fed's Beige Book, and home price numbers. And all of those things can move rates. So if you want me to break down any of these topics in more detail, or you just want to run, some numbers for a scenario, feel free to let me know. Have a great weekend, and I'll see you next Friday.